This episode of the Old Dogs REI Network is brought to you by Mino Studio.
In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manassero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manassero, and this is the show where 50-plussers and anyone else who wants to join us gets solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes or Apple Podcast, type in Old Dogs, spelled D-A-W-G-S, find our podcast, and subscribe. Well, we got a great show for you today. I'm looking forward to it. We have a gentleman here who has been in faithful service to our country for quite a while now. He discovered real estate investing, and I'm talking about David Pere. And David joined the Marine Corps in August of 2008. Since that time, he has lived in or traveled to many unique places around the world, including a combat tour in Afghanistan. David got started in real estate investing in 2015. He house hacked a duplex with an FHA loan and lived in it for a little while getting married to his beautiful wife, Kimberly, and receiving orders to Hawaii. While stationed in Hawaii, David bought a 10-unit apartment in Missouri and has had continued success with real estate investing. Through these experiences, From Military to Millionaire was born, with the goal of teaching service members and veterans how to build wealth through real estate investing, entrepreneurship, and personal finance. Wow. Well, David, welcome to the Old Dogs REI Network.
Thanks for having me. That was I really like your intro. I was listening to it, man. I need to work on the intro for my show. That's awesome.
No, it's great, man. You got an awesome background. First, before I start anything, I do want to thank you for your service to our country, man. Man, it is a tough job. I have friends that are in the military, and I know that there are great sacrifices to be made, and sometimes the biggest ones being our wives, right? You know, and it just sounds like you're doing just a great thing, especially as you're giving back to. I've had so many guys in the military that have contacted me and wanted to get involved in real estate investing. Once they learn real estate, it's amazing how they, even though they may be, going from tour to tour or traveling, constantly, you're able to do it and able to, invest remotely. So I'm dying to hear your story. So if you can, why don't you just give us a little bit about your background, where you're from?
So I was born in Northern California, up by Santa Rosa, just north of the Bay. And when I was about 6 years old, moved out to Little Rock, Arkansas, grew up in the South, Midwest, whatever you call that. And I think that was great for me. I'm a little bit of a rebellious, I guess I'm what you would expect a Marine to be like when he's going through high school. So growing up somewhere where, we had a little bit of land and I could, have bonfires and fireworks and stuff was nice. And coming up end of senior year, I came up to that decision where I was like, I don't know what to do. I don't know what I want to study at school. I don't really want to go to school. I don't really have money for school, and I don't want to stay in Arkansas. The military is a great option. Let's do that. And I joined the Marine Corps. Going on next week will be 12 years. I mean, I was stationed in Japan. I've been in Afghanistan, a whole bunch of other states, stationed in San Diego, Missouri, Hawaii. And, I do logistics stuff. So I do transportation. I drive trucks. I move people around, all that super exciting stuff that they don't ever put in movies because it's not really all that exciting. And in 2015, a friend of mine handed me Rich Dad Poor Dad, ironically trying to sell me on Amway. He's trying to get me into some multi-level marketing. And I kind of jokingly remember telling him like, I don't read, like I'm a Marine. We don't, books, which is totally not true. We definitely have education and whatnot. There's educated people in the Marine Corps, but it's the stigma. So I like to roll with it because I just didn't want to read a book. And like without even hesitating, this guy pulled a CD-ROM of audiobook of Rich Dad Poor Dad out of his pocket and was like, well, good thing I got this and you can listen to it while you drive. And I was kind of like, oh man. So I listened to it less because I wanted to listen to the book and more because I was like, well, he got me. So, okay, I'll listen to it and then that'll shut him up and I'll never have to deal with it again. And within 3 months of listening to that book, I bought a house. So I listened to the book.
Seriously, wow.
Yeah, I mean, I wish that I knew the day that I finished that book. Because, I mean, it can't have been, 3 months is probably generous. I mean, I listened to that. I stumbled across Bigger Pockets, and I read 2 or 3 of their books. And then I was like October, November-ish. And like the first week of January, the lease on my apartment was coming up. And so I was like, okay, well, I'm spending $550 a month for this 2-bedroom apartment. And prices in the Midwest are super cheap. So I found a duplex where my mortgage payment was $615, and so I was like, okay, I'm paying $550 a month for an apartment that's two bed, 1 bath. I could buy this duplex for a whopping $65 a month more, and some $4,000 out of pocket. But I'm like $65 a month more, and I'm got a tenant on the other side paying $475. So like my worst case scenario, if the place is totally vacant, is an extra $65 a month, maybe some repairs, but I don't think I ever paid more than $150 a month to live in the one half while the other side was rented. And then when I moved out, it's paid me $300 to $400 a month, like clockwork now for almost 5 years. So I probably paid for my down payment 4 or 5 times over. And that just kind of sparked. I mean, that was the start. That was kind of the, oh man, this is real. Like this can work moment. And from there, I just kind of kept looking for properties. My wife had a single family. And so I pulled a HELOC on that. We used the HELOC to buy an additional 5 acres next door to the single family. So we had a 10-acre plot, and we had a few cows. So we kind of grew the herd a little bit so that the cows would actually pay for the mortgage on the extra 5 acres, which I always joke that I got cattle financing. And then my next purchase was a 10-unit. I bought that while out of state with less than 6% down because we got 10% seller financing and like 84 and some change percent from the bank. And then we've bought some other stuff. So I partnered on a couple flips in Hawaii. I did a flip that did not go well in Missouri. We bought a 40 unit on a lease, which we ended up not executing the lease on. And then we bought another duplex, and I'm a general partner on a 146 unit syndication in South Carolina. So that's kind of where we're at right now. Right now we have 15 occupied rental units solo, and then a general partner on 1 syndication, and just kind of slowly growing from there. But my real estate focus has been a little bit less as I've been still full-time military and trying to grow the platform. So just kind of, I guess that's probably brings us up to speed.
That's great. That's great. Now that wasn't in Hawaii. Was the duplex in Hawaii?
No, I tried to buy stuff in Hawaii, but I got outbid. So when I lived in Hawaii, the VA loan no longer has a cap. You can buy, there's not really a limit right now on what you can buy with the VA loan, but that wasn't the case when I moved to Hawaii. And so I would have had to buy about an hour, 45 minutes to an hour away from the base. And my wife was very pregnant, so that was not exactly ideal. We made several offers on properties next to the base, but our limit was 725, and that just was not competitive enough for the Hawaii market. So we got outbid a bunch by people buying cash, and we just Never able to own anything there, which I wish we did, because I would love to move back there one of these days. But
That's great. So, so you lived in the duplex for a short period of time. How long did you actually live in the duplex?
probably we closed December, probably 6 months, 7 months.
Okay. So was that difficult though with the FHA loan? Aren't you supposed to stay there for, like at least a year or?
And I had every intention of doing that. I didn't know that I was going to be getting orders. I thought I was going to be out there for a little bit longer. I was anticipating like fall, maybe the next year. I actually, at the time that we closed, I was thinking about becoming a career recruiter. So I would have stayed out there for another 2 years at least. And that fell through because I didn't get promoted. So I wasn't eligible to become a career recruiter. And then all of a sudden I got orders. Ironically, we closed the duplex, and I think 2 weeks later, I got orders saying, "Hey, you're leaving in 6 months." And it was like, okay.
Military life.
Yeah, but that's a loophole to the, there's obviously there's the intent to live there, but the intent was met. I just, the actual occupancy time was not, because I moved.
Right. And now you mentioned VA loans. Are you able to use VA loans to invest in properties?
Yes and no. That's not the intent of the VA loan. The intent is just like the FHA, primary residence.
Okay, primary residence. Okay.
However, just like the FHA, you can buy up to 4 units, and you can rent the property out when you move. So you can use it as an investment strategy. I have a buddy I just helped. Well, I didn't help him, but I hooked him up with a realtor out here in San Diego, and he just bought a $730,000. It was a duplex, but it has a non-conforming third unit. And he bought it for $730,000. I think he actually got like a 1% seller concession back at closing too. So he walked away from the closing table with some cash in his pocket, and then he's got it all rented. And after all said and done, he's pulling in $600 to live in it, and a month, and then he's saving his entire housing allowance. And then when he moves out, he'll be able to rent it and cash flow probably another $1,500 on top of that. So although you can't technically use it as like an investment, you can do the house hack with it, which is just super powerful when you think of, an E5, like a sergeant in the military can potentially buy a $750,000 home. And if they play their cards right, live for almost free by renting out other units and other rooms, and they didn't have to put any money down, and their salary is only, $50,000, $60,000. So it's a definite advantage if done correctly. It's a double-edged sword, though, because it is 100% LTV property. And I think if you asked anyone who did something like that in 2007, 2008, they may say it's not the smartest thing in the world. So you definitely have to be conservative and have your finances in check first. But I think that's kind of a rule of thumb for anybody investing.
Right. Well, jumping right into a 10 unit, plus you bought it remotely. I mean, now did you actually get to go do a walkthrough in that purchase for the 10 unit in Missouri?
I was, when we got that under contract, I was mailing duplexes, and somebody called me and said that they had a duplex they weren't interested in selling, but they had a 10 unit that they were. And I was like, oh, okay. Well, I happened to be in town over Christmas break, and it was like the day before I left. And so I was able to see one of the 10 units and walk around the outside. And the one unit I went in was, I don't know that you would qualify the guy as a hoarder, but definitely not a pristine unit. It's not the unit that the seller would have wanted to show me, but it was the only one that I could convince. I mean, full disclosure, I didn't actually get the seller to let me in. I basically just walked around the building, knocked on doors, and said, "Hey, I'm looking at buying this property. Can I?" Because it was like the day before Christmas Eve, something like that. I mean, it was right around Christmas. Maybe it was the day after Christmas. So the seller was not even in town, I don't think. And I basically just walked around the property and just asked until somebody was like, "Yeah, okay, take a look." And I looked inside, like peeked my head in, but that was about the extent. And then, I was back in Hawaii, and all the negotiations and everything else was done while I was there.
God, that's great. That's great. And it's doing well today?
It's my favorite property, actually. So it's, we're talking Missouri prices. So I got it for $212,500. It was listed at $245. And we negotiated them down to $225. And then after needing some repairs and stuff, got it down to $212,500. And then we convinced him to bring 10% seller financing, 4% for 5 years. And the bank I guess, I don't know. Somehow the bank messed that up and they forgot, like they didn't account for the 10% seller financing. So the bank showed up with the original loan amount. Or no, sorry, the bank didn't realize that we dropped it from 225 to 212.5, and somehow that got lost in translation. So I got this phone call on closing day that said, "Hey, we brought too much money. It's too late for us to go back and get another check. Do you want to just?" They were like, "Your two options are either close tomorrow, or we close as is, and you take a bigger loan from the bank and you put less money down." I'm like, oh, okay, I'll do that. And so I only put 10,000. It was like 10,900 and some change down.
God, that's great.
And yeah, it was like 5.1% or something. I forget the math. And yeah, so 18 months later, I refinanced and I pulled enough money out to pay off my original down payment and the seller financing, which was cool because the guy just let me pay the principal balance down. So I really only paid like 1.25% interest on the money. And I paid him off, paid myself back, didn't pull any other cash out of the property. It appraised much higher. And I got, I think after 18 months, I was sitting at $70,000 in equity and like $1,200 to $1,300 a month in cash flow with no money in the deal. And so it's, it's been great. I've owned that thing now for 3.5 years. And yeah, it's been an awesome property to have for sure.
Oh, that's great. That's great. Now, going from there, were you looking now for more multis, or were you, sort of, you went went into syndication? That's a major step there from a 10-unit. What were you? And you also mentioned too that you were doing mailings for duplexes. So you found a list and were mailing to to likely prospects to try to get off market deals?
Yeah, I found a list. I pulled one from ListSource, and so I was looking for absentee homeowners who, so they don't live in the property, but they own it with 2 to 4 units, and I've been just mailing them. I bought another duplex doing a similar thing since then. Actually, I guess that one wasn't direct mail. That was just someone listed it well under market when the pandemic kind of started, and I jumped on it very quickly. And so I got it for a pretty good deal. But I'm kind of an oddball. I've done a little bit of everything, including Airbnb-ing bedrooms out of my current house that I'm living in. And I kind of dabble in any – I know everybody says you have to focus on like a super specific niche. I just kind of figured that buy and hold is that super specific niche. And I really don't care if it's 2 units or 20 units. If the numbers are incredible, the financing is good, and I can get a decent deal on it. Provided the deal works, I'm okay with it. So far, I bought that duplex for probably 25% under what it was worth. And it had it took me $1,200 to get it up to speed. And so it was just a good deal. So I bought it. I am currently mailing out for anything from 25 to 100 doors in my market, but I've still got my eyes out for there's a few like single family or duplexes that I've got some feelers out just because I either know the specific property or I know the owner. If you can get a good deal on it, I'm okay with that because I plan on holding forever. So I kind of think that's my way of diversifying is they're all buy and hold, but some of them are single family, some of them are big apartments, and they all kind of play a different role. So I don't know that necessarily answers your question other than to say I kind of look for anything that I can hold until I die.
Yeah, no, that's great. I think that's a great strategy. What kind of response are you getting with your mailings? And are you mailing to the same areas like repeatedly over, every 3 months or every 6 months?
Yeah, not nearly as consistent as I should. Probably the same zip code, same mailings, probably every 3 to 6 months. But I would like to say that's ideal. It's probably been like once and then like, oh yeah, shoot, I need to mail them again. I get a decent response. I haven't really got a solid deal in a while. I think ironically, I would have assumed that people would want to sell when all of this started. And other than that one deal that I think was kind of a panic listing, it seems like everybody's just decided that they're content to hold. I was really hoping that COVID would mean that I could lock in some seller financing for some landlords who were looking to retire. I really thought that it was going to open a lot more opportunities than it has. And so I still haven't quite figured out that niche, but my current mailings, the ones that I'm sending out, I think I just paid for them. I just have to send the Excel document over to the company to get these ones out because I'm not doing these ones myself. But I'm mailing out to, it's like a list of 220 apartments in my area that I'm just trying to see if maybe the commercial side, the larger apartment side, maybe they're looking to sell. I don't know, because I'm kind of baffled by the fact that I sent out like 400 mailers for duplexes to duplex, triplex, fourplex, and got virtually no responses, which is the lowest. I mean, it was like 3 responses, which is lower than I've ever gotten before. And my letter was much better, I thought, and it had pictures of my family, and like I did all the tricks in the book to get high response, and it was just totally bombed. So I'm kind of baffled as to what's going on with some of the landlords in my market right now.
Wow. Yeah, I think there's a lot of people that are just, and just in talking to people that I know that are investors, they're sort of a wait and see mode. We've got the election coming up and a lot of uncertainty there regarding the economy. So I think there is that, the folks that are in that mode, even though, you've got just record low interest rates and a lot of other favorable factors. Those that are investors, I think they've also, we kind of survived what we thought would be a great loss in terms of evictions and people not being able to pay, and and then I think the supplementary unemployment and so forth has kind of allowed that to sort of stretch out for a while, but now that's getting reduced a little bit, and it also may go away altogether. So I think that I don't know. I am just kind of curious about a lot of those responses as well. But I think a lot of people I talk to that are sort of smaller properties, less than 100 units, are in that sort of wait and see mode.
I am holding more cash. I'm slowly building up the cash base, and I'm budgeting more for vacancy and more conservatively for properties and holding more. But I'm not selling anything, because if people are even remotely right about the potential for, I don't want to say hyperinflation. I don't think that's the case, but there's a potential. Ironically enough, it seems like we've had really low inflation so far this year, but there is the potential for more inflation to come as a result of how much money we printed for these stimuluses. And so I kind of feel like, well, okay, if the inflation hits, I would definitely rather have all my money tied up in assets that will benefit from it, as opposed to have pulled it for cash and then I take a massive hit. So I'm budgeting more conservatively for cash and vacancy, but I'm in the same boat. I don't plan on selling anything just in case that happens.
Yeah, I think that's across the board, not only in real estate, but other investors too, are kind of holding on to the cash, waiting for the deals, if that happens. If it turns around, then that'll be a different show. But if it does turn into a, like you said, sort of a hyperinflation, then that would be a time that there'd be all kinds of deals. And so, yeah, I think that's a good part of it too. That's interesting. Tell me about getting into the syndication. That's another departure. Now, you also mentioned you flipped, didn't you? Did you say you also?
Yeah.
How do you do that when you're in the military?
Well, not successfully in that case. When I was in Hawaii, I partnered with someone and flipped a house or two, where I just basically was like, hey, I found this deal. Let me, here it is. Can I tag along and learn from you? And I got a lot out of that. I didn't make really any money off it because I wasn't an equity partner on it. He gave me a little bit of a, thank you, but I got to learn. And so I had some confidence from that. And I was home. I found a property that, dirt cheap. I made the biggest mistake of all, I think, for a rookie flipper. I bought a dirt cheap house that needed a big renovation when I should have done the other way around. Decent house with a small renovation. Ultimately the biggest problem was me managing the deal. I got a contractor who, by all accounts, should have been awesome. He had been highly recommended to me by a few other house flippers and wholesalers who've used him for deals. And ultimately he kind of overextended his business and imploded. And I was just not managing as well as I should have been. So I I managed to give him one or two more draws than I should have, and he'd already stopped working and was just kind of sending me misleading pictures. And my wife, who was bringing the checks, was looking at the property, but it just misled. And so, ultimately what I should have done is I should have had my property manager, the one handing him the checks and actually physically like walking the property. And I just trusted the guy a little too much, and I got caught with my pants down. And when he went out of business, he took my extra 2 draws that I had paid him with him, and I ended up selling at a $30,000 loss. So about a 50% negative ROI, which ultimately, in the grand scheme of things, it's funny how perspectives change over the years. In 2015, if I had taken a $30,000 loss, or you had told me I would have taken a $30,000 loss, I don't know if I would have gotten started. In 2020, I took a $30,000 loss, and I said, well, it's going to take me a few months to build up and try again, but okay. Yeah.
Yeah, and that's the thing with flipping. Flipping is you really do learn from your mistakes, and those that stay with it, end up doing well. But it's one of those things you can get discouraged pretty easily. Like you said, when you buy a place that needs a lot of rehab, and you pay all the money that you do to get it up to where it needs to be, then you can get crushed on, especially on the construction side of it. So, but some people do really well. I know a lot of guys that are just major league flippers that are just going gangbusters in it. So it just depends. It's one of those things, though, you got to stick to. I think that's one where you need to have the tunnel vision and just stay flipping, and you can't really. And I know some flippers that do occasionally, they'll flip a house, they say, this is nice, this will make a nice rental, and they set that aside they as their own personal rental. And then they'll go on and from there. But generally, I think the guys that do the best are the guys that just focus 100% on flipping.
I agree completely.
Talk a little bit about, you're working with other guys that are active as well as vets. Tell me how that kind of opened up. You probably had guys that were asking you, probably. I would think that'd probably be the first. I don't know. How did that start?
You would think that would be the natural progression, but I am an oddball, I suppose. So when I was deployed, I kept a really decent journal. Like I kept a journal and a mission log, so I can kind of sit down and lace them together and say, this is what I did on this day in Afghanistan, and this is how I was feeling that day. And I always thought it'd be really cool. I only had this idea a few years ago, but to put them together and write a book and just say, this is what a normal person in Afghanistan went through. There's all these books about Navy SEALs and all these guys who did all these cool things, but there's no books about this is what a normal Lance Corporal thought Afghanistan was like. This is the tomfoolery, And I was thinking about writing this book, and then I had this epiphany that I'm a nobody. Nobody knows who I am. Why would anybody read a book by me when the only people that know me are my Facebook friends, and half of them were, there with me. So I kind of thought well, I'll start a blog and I'll just start kind of writing. And I had no idea what to write about. So originally my idea was okay, well, I'm just going to just write about my thoughts just to get better at writing. And a friend of mine was like, dude, why don't you just write about everything you're doing with real estate? Just document what you're doing. If nothing else, maybe you'll learn something because you have to do more research to write about it. Or maybe you can, have something cool to show your kids one day. I was like, oh, okay, yeah, I'll do that. And I didn't even come up with the name for the blog. I came up with 5 or 10 different names. Nobody liked any of them, of my Facebook friends and people I was asking. Some friend of mine was like, what about Military Millionaire? And then that domain wasn't taken. And he was like, what about From Military to Millionaire? I was like, oh, that's too long. And then I put it up in my Facebook group as an additional option on the poll or on my Facebook page, and it blew everything out of the water. So yeah, I can't take credit for the idea of starting a blog about real estate. I can't take credit for the idea about the name for the blog. And I just kind of started writing, and then very, very, very quickly it was people like this. Hey, there's people on my blog. Hey, there's people following my Instagram. Now I have a Facebook group. Now I have a YouTube channel. Well, I should start a podcast. And then 2 years later, I'm at a spot where I'm looking to exit the military next year and go into the reserves so that I can pursue the online platform full time and really help people. And it's been a really interesting and fun ride.
Oh, that's great. That's great. Have you had some folks that have, gotten started and really done well?
Yeah, we've had some people that have done some very interesting things. I've been able to help. Well, for one, I've been able to help a lot of people buy like a house hack with their VA loan by, whether that's connecting them to a decent agent or just walking them through the numbers. So I mean, I know several people even in just San Diego that have bought, expensive duplexes where they live for, or triplexes, or even a fourplex where they live virtually for free and they paid no money down. I've helped a few people do that across the country. And so, I mean, that's huge to me. That's probably my favorite thing, because then it's like, well, hey, you just bought your first property, your living expenses just got slashed, but also you're going to learn how to be a landlord, and this is going to be the catalyst that really sets you off to build wealth. So I've been able to do that. And then we started a mastermind group for service members. And so some of the guys in that group have just been blowing it off, just absolutely doing incredible things. And not that I can take any credit for those, but they're people I know, and you asked, so I'm going to pretend like I can. No. It's been really cool to see. I mean, there's a lot of military real estate investors floating around, and some of them are just absolute animals. We got some guys that I know that have big time syndicators, big time house flippers, and just some really, really successful real estate investors that are in the military.
Yeah, I've got actually a friend, another David, actually, that's gotten gangbusters just investing. He's a lieutenant colonel and, or I guess retired now, but has just started investing while he was still in the military, and did really, really well. And now he's in syndications and a lot of other things. So, yeah, there are a lot of good success stories out there for the military, definitely.
Yeah.
Well, as an investor, you've got involved in a lot of different aspects, other types of strategies in real estate investing. What would you say would be sort of the biggest mistake that you learned from? And by sharing that and what you learned from it, it'll help our listeners to hopefully avoid similar types of things.
Well, aside from just doubting myself and thinking I needed to go slow. No, I think probably my biggest mistakes have just been trusting people too much. So I've had a few different issues where, whether it was that we negotiated some terms and over the phone, and then they didn't make it into the deal because, oh, I never said that. And I didn't get it, an email confirmation like, hey, just to confirm, this is what we talked about today. Can you just reply acknowledging? Or the contractor where the mismanagement, and I just trusted him a little too much to manage accurately. And so I think probably my biggest fault with real estate investing has been not verify. In the military, we have this phrase, trust but verify. And I've essentially thrown that to the wayside and said, oh, this guy seems awesome. I'll trust him. He's a professional. I paid him. He'll do it. And that has probably been my biggest mistake, rather than just knowing like, okay, it is a business. He shouldn't be offended that I'm checking up on him. And, ultimately he needs to be able to answer those questions, or he's not doing what he needs to do. So I would just say, make sure that no matter how great a person is or how much you think they're a good friend from back in the day, treat it like a business and, manage them appropriately, even if that's someone that you think you can trust, just because it's better for both of you that way in the long run.
That's great. That's a good one. What would you say would be sort of your biggest success?
It's a good question. I mean, I would say the 10 unit. I'm kind of one of those vision guys who's like, well, let's jump out of this airplane and we can build the parachute on the way down. And so I think I've taken a few risks. I've taken a few risks that have cost me money, but I've taken a few risks that have paid off very well. And I think just kind of the ability to jump all in and go for it, rather than what ifing myself out of potential deals, has been beneficial for me.
I mean, you've got definitely a business going here. I mean, it sounds like you're not only are you investing, but you're also investing in people's lives too. That's a big thing. In the same way here, at the Old Dogs Network, we're trying to help those that are 50 years of age and older to be able to look at real estate investing as a means that can help them in their retirement years, and hopefully to create a legacy that they could leave to their families as well. What advice would you have for those folks? Now, again, keeping in mind they're starting later, so they don't have maybe the time frame that you have to build up a portfolio. They might be able to, but again, they'd have to do it in different terms, I think. What advice would you have for those folks that nearing a retirement or in retirement?
Well, I would say if you're that close to retirement, the first thing would be to abide by Warren Buffett's first rule: never lose money. Don't take a risk that you can't afford to take. It might be enticing to go big or go home and see a huge reward, but while I'm, quote, young and can afford to, if I went bankrupt today, I'd still have time to figure things out and make it all back. If you're 55, 60 going on retirement, that's going to be a much, much, much bigger hit and a much scarier risk to take. So I would say that. And then I would just say, find a really, really good team. And if you can find a good team and partner up with the right people, then whether you want to do limited partner, like passive investing in big deals, or be the main managing member of big deals, of flips, whatever your strategy is, just get a really, really good team and go all in on that specific niche. And, if you're trying to build wealth that quickly, you probably may want to focus on a more active strategy like the BRRRR strategy: buy, rent, repeat, or buy, rent, rehab, repeat, whatever, or house flipping or something like that, where you can make money and then move it into cash flowing assets. Whereas someone like me might be able to take, much more time and just buy one house at a time. You may be in a position where you need to do some value add plays where you get your equity back faster and then move that into rentals. It's going to be a different strategy, but it's kind of I know that's kind of an odd way to say it, because I just mentioned not taking a lot of risk, and then I mentioned flipping houses. But I think if you do it with the right people, you can be all right.
Yeah, I think that's true. You definitely need to at least align yourself with somebody that's got more experience that can help. And I think that's key. It's interesting too, you mentioned about investing for the long term, and maybe you might want to focus on that, because so many people, they've got sort of a short-term play, and they want to get a place, fix it up, almost like the flip mentality. But even with multis, the idea is, go in there, do the rehab, increase rents, and then sell it for significant profit. To talk about investing for the long term.
Well, ultimately, the best tax benefit for investing, the best exit strategy as far as taxes go, is probate. Pass everything on to your offspring or whoever, with a tax basis that gets leveled up because you passed away. May not be the most convenient structure in the world, but I don't necessarily plan on selling most of my properties because I understand that. But the thing is, there's a study that was done, and I'm not going to quote who or when or where, but the marshmallow study, and I love this. And it's saying, basically, they took a bunch of kids, they put them all in their own room, they put one marshmallow in front of them, and they said, we're going to leave the room for 15 minutes. If you eat that marshmallow, okay, study's over. If you don't eat that marshmallow, when we come back in 15 minutes, we'll give you a second marshmallow. And the vast majority of the kids caved and ate the marshmallow, but there were a select few, I forget the percentage, but they were able to delay gratification and stay until that person came back in so they could get the second marshmallow. And they followed those people throughout. Like, that was an interesting study in itself, but they followed those kids for years. And what they found was that disproportionately, the people who were able to wait for the second marshmallow were more successful in a myriad of metrics throughout life. And I think the concept is just being able to delay gratification. So if you can delay gratification and understand that you may not make $1 million this year if you buy a rental property with a decent amount of debt, but if you put a 15-year loan on it, in 15 years it's paid off, and now you're making a lot more money, but you were able to buy multiple houses throughout that time by leveraging, as opposed to just one cash flowing asset. That's, it's just kind of a different strategy. I play the long game in knowing that if I bought a house right now and the market tanked, as long as I don't sell and I just hold that property forever, over time, it will be worth more in the end. It'll be paid off, it'll cash flow, and I'll be okay. And so that's kind of my strategy, is just, I don't care what the market does. I'm just going to hold forever.
That's great. think there is a shift. There are some people that are focusing more on long-term plays. As I'm interviewing guests, and I'm seeing that there are those folks that are going for the 10-year, 15, 20-year hold. And I think there are benefits, like you said. You can have that property paid off. You can even accelerate, your payoff on those properties, and speed up the process a little bit too, with very little creativity. So I think that's a strong one. You also mentioned too your GP and in a syndicated deal. Talk to me about that and how you got into that.
Well, interestingly enough, that's kind of a product of my network. I was actually approached by that team one or two, maybe three times before, and I just wasn't really in the mood. wasn't really ready, I didn't think. And I think it was the third time they approached me and they said, "We've got this deal. We'd like you to be a member of the team, help with some investor relations, some due diligence, and a little bit of the underwriting. And just, we know you've talked about getting in on a little bit of this experience. And, in essence, I think part of it is that I have a network. And so there was a piece there where it could be mutually beneficial, where I have a decent network and I get to learn part of the deal. And so they brought me in as a co-sponsor. The deal looked good, and I basically went along for the ride. I got to do due diligence. I worked with investor relations throughout the purchase, the acquisition phase, and still doing investor relations stuff and working through calls with the GP every week. And it's been a really exciting experience, just from the standpoint that I'm learning a ton. My ownership percentage on this is minute. But that's, I think, the case in most syndications, right? If you put in the minimum, you're not a huge percent owner, but you're getting a good return by the end of it. And yeah, we bought this property, and it's been very interesting to watch how a syndication works and every piece of that. And then also the fact that, it's been COVID. And so it's been a very interesting first few months, but we've done very well. And I think overall, even though we've had a little bit more vacancy because of lower expenses with utilities and lower than expected maintenance and other things, we've actually netted the same, if not a little bit more, throughout the last few months than we had originally budgeted for. So can't really complain. And I guess that's kind of, we're still in first phases going into renovation phase. So it's definitely early in that process, but I do foresee myself doing more of those throughout the years. I enjoy them. I don't know that you'll ever see me being the main face on a big capital fund. I kind of enjoy just more the relations piece and the finding deal side, as opposed to there's a lot of headache and paperwork that goes into the syndication world that I like simple base hits, and syndications are awesome. But I think I prefer the idea of being a member of one than being the main guy. So
yeah, definitely a lot of responsibility on that side. That's great. Well, what's sort of your long-term play? Do you have a goal for your investing efforts and your educational efforts there?
Ultimately, when I leave the military next year and I end up in the reserves, my goal is to be positioned so that I can leave and I can focus 100% of my time on building my community and investing. So I've got a little ways to go for that. I'm at a point now where I could self-sustain, but I wouldn't be able to continue investing because it's not spinning enough cash flow off to build a capital fund. And I want to get to where I'm able to walk away and focus on all that, and the business can self-sustain and grow. So ultimately, that's the goal, whether that's 5 more units or 50 more units, or I really have just found that I enjoy the hunt, and I enjoy the negotiating and everything that goes into real estate. So I don't foresee myself slowing down. I'd like to think that there'll be some more syndication opportunities in the future. And then as far as the community goes, just helping more service members and vets figure out how to get their finances in check and achieve financial freedom. I'd like to help more people find a way to house hack. And, I haven't set some audacious goal for number of people that I want to see achieve financial freedom, but I think that if I just talk to everyone and provide a bunch of content, I'll help a lot of people.
That's great. That's great. Well, sounds exciting. Man, you're definitely moving forward here. It's impressive. We're kind of running out of time here, so I kind of held you longer than I said it would.
No, it's all good.
But we have this session we call our Wrap It Up, kind of like a lightning round where I ask you a series of quick questions and about resources and books and things that you might recommend, and just sharing that with our listeners is of value. It's something else they can take home from this interview. So if you're ready, we can go ahead and wrap it up. All right, let's start with favorite real estate book.
I am currently reading The Hands-Off Investor by Brian Burke. It's a brand new book on syndication that is helping, it's geared to help limited partners find syndicators. And honestly, it's been a very, very, very insightful book. So that is very closely coming to the top. The other one would probably have to be the go-to How to Invest in Rental Properties by Brandon Turner, which was one of the first 2 books I ever read.
Yeah, that's a great book. That's a great one. How about just favorite general business book?
There are so many, but I am a huge fan of The 4-Hour Workweek by Tim Ferriss, because as a salary employee, the mentality of doing as much as you can in a certain amount of hours is just not how you think. And that book really changed my mind on efficiency.
That's a great book. How about most valuable website for success, other than your own?
Other than my own, I would lean towards Bigger Pockets. They are just an incredible resource for all things real estate. But if we're talking general website that will help you be successful, my answer would have to be Google, and under Google, their sub-company YouTube, because Google and YouTube are probably the 2 biggest educational resources in the world, and also people just don't tap into them enough. It's amazing when I was learning about real estate, the amount of times I would just pull my phone out and ask Google, and I would learn. And so I think that's extremely undervalued to a lot of people.
Good point. How about, do you have a favorite app on your phone?
It is called ICBA, and I don't know why it's an I, because it stands for Local or Community Bank Locator, but it's ICBA, and it is literally just an application that you download, and you open it up. It has one box. You type in a zip code and hit enter, and it helps pull up all the community banks around that zip code. And that app has saved me a lot of money because it's allowed me to go, ooh, I need to call this bank and see if they're going to work with me on this loan. And that's how I found my current small bank that lends on my properties and was willing to do 85% down with 10% seller financing. And I think that app has just been invaluable to me.
Okay, that is great. This is the first time I've heard that one. That's
why I like to use it. Nobody knows about it.
It's great. No, I mean, if you're in a local area and you're investing, out of state, which is what I do, and I'll tell you, it's just trying to find those local banks that you can work with to build up a local portfolio. It's so important. That's great. Good find. How about a favorite quote?
Ooh. There are so many, but I'm going to just go with the old Hernan Cortez, burn the ships. And I think that the story behind that, where they were going to go and invade South America or whatever, and as invade's probably not a nice word, but basically, and they realized they were super outnumbered, and so Cortez just burned all the boats and was like, well, you either fight or you die, and they ended up winning despite, insurmountable odds. And so I like that quote just because essentially that's what I'm doing next year by walking away from the military and the pension. I mean, granted, I'm not burning all the boats because I'm doing the reserves, but I'm walking from the safe career with the good pension and great benefits to go do my own thing. So I think that quote is, I like it, I think, because I just need to remind myself that it will work out.
I like that. I like that a lot. And the final question here. I don't know, it doesn't sound like you've had this experience, but I'll ask it anyway. And if you lost absolutely everything, but knowing what you know, if you had to start over and you only had $1,000 in cash, what would you do with that $1,000 to relaunch your real estate investing business?
Does put it in my savings account and go find private money partners count? I would probably take all 1,000 and it would all go straight into marketing. It would be whether it's direct mail or 2 months supply for text blasting or millions of bandit signs, depending on your market. I would spend I would say I'd probably spend 800 of it on marketing and 200 of it on taking very specific people to coffee or whatever in my market to try to find private lenders, and I would roll that way.
It's great approach. Wow. Well, man, we have, as I said, we kind of went a little bit over here, but man, I've really enjoyed this. This has been fantastic, David. Thank you. But we have one last thing here. Actually, no, there's two more things. One is I'm sure a lot of people want to know how they can reach you and get information. You've got great resources on your website. I'm sure that's one area, but how can they get a hold of you and find out more?
The best place to reach out if you want me to message you back is Instagram at From Military to Millionaire, but you can basically go on any platform and it's either under Military Millionaire or From Military to Millionaire, and you can find me there, and I'd be happy to talk to anyone.
That's great. And you've got a couple of websites too, or at least one I know about.
Yeah, from militarytomillionaire.com.
Gotcha. Yeah, great stuff. Awesome. Well, the last thing we got to do here is taking care of business is we have all of our guests as tradition here to actually have you close us out with your best old hound dog howl. Oh. Now you're a Marine, I know you got the hooya, but I don't know if that really counts. It's got to, sound like some sort of a dog.
Ooh, man, I'm pretty sure I've got guests in my house right now, so here we go. Oh! I don't know if that works. But.
That was a good one. That was great. Great, man. Excellent.
I love it.
All right. Well, man, thank you so much for being on, David. This has been a real pleasure.
Thank you very much for having me.
I also want to thank all our old dog listeners out there, too, for joining us. I know there's a lot of other things you could be doing right now, but the fact that you've taken the time to join us means a lot, and we really appreciate it. Now, please note, everything that David talked about today here can be accessed in our detailed show notes on the Old Dogs website at olddogsreinetwork.com/blog. And you're going to look for the episode with David Pere. Well, that's the show for today. Remember, cash flow is king and real estate investing the means. Until next time, keep moving forward and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.